Let's get you some of the stocks you need to really keep an eye on in the trades going forward. NMDC for one, it was one of the worst performing stocks in the Nifty today. It actually ended at the lowest point in trade. There was definitely some news bit which was worrying the market, which got confirmed in almost last hour of trade, that the company had actually gone ahead and taken a price cut as far as iron ore files are concerned. So there was almost a 7% price cut which the company has taken. Large part of the market was surprised because some of them said that the management had indicated at no near-term pricing pressure at the time of road shows which were happening just ahead of the offer for sale. So in that sense, a lot of brokerage notes or institutional notes which got circulated post that were indicating at some weakness coming in. So watch out for that trade. Also, if you look at the metal counters globally, they continue to remain weak. Metal prices globally are also hovering at multi-month lows. So a lot of fresh short positions have been taken on NMDC in trade today, which may persist for a day or two according to institutional dealers.
Okay, away from metals, a stock to keep on your radar would also be an Aurobindo Pharma. Dealers are indicating that there is likely to be some HNI accumulation in the stock. Remember, just today it received the tentative US FDA approval for the Atripla generic, which is an anti-AIDS drug, and that is certainly going to augur well for the company. And not just that, the stock has been trading above its 200 daily moving average, and dealers believe that all of these multiple approvals, the kind of unit clearances that the stock has also been getting so far, is going to be a major shot in the arm in the short term. So Aurobindo Pharma is another stock to keep on your radar.
Right. Nitin, coming back to the IT sector, most of the major large cap IT stocks in the quarter gone by have appreciated around 15-20%. In fact, even Infosys has appreciated 20% and hitting almost 3,000. Do you think at the current juncture, and based on the kind of management commentary we've been getting from TCS, Infi, other large cap IT stocks, how are they priced? Are they priced to perfection now?
I think yes, if you really look at the valuation in relation to growth, and if you take an Infosys and a TCS, they trade anywhere between 1.2 times their growth number as far as the PE is concerned. So I think that we've seen a fair run-up, and until and unless I think the most market will be watching what the management commentary is going to be for the year ahead before taking a further call. But at the present moment, it does look, at least for these two large caps, that they're more or less this thing. But what's also happened, Nikunj, is that in the absence of clear cues on industry, people have flocked into IT, what with the US market showing signs of recovery and the rupee being what it is. So, the IT has become a kind of a preferred sector for most people to hold as such. However, among the larger names yet, we believe that, there is some steam left as far as stocks like HCL Tech go, or even Wipro, which is coming back. So I think they are yet, now they're yet at a discount to some of the larger peers.
Neeraj, let's bring it over to you. And would there be any select stocks that you'd advise investors to put their money into for the long term?
Yeah, actually, I think the broader market has been doing well. So among the broader market, I think one can look at some mid-cap liquid stocks. One that we covered is United Phosphorus, which came out with good set of results in the last quarter, and I think this quarter should also be encouraging for them. So valuation-wise, that is looking attractive. So that is one stock which I would say. The second one can be Tata Motors, where I feel there has been a good correction in the stock. There were concerns about some emission norms which are going to kick in China in 2015, with the company saying they are working towards, towards those emission norms. So I think the correction has been pretty steep in the stock. And even the number that came, the domestic numbers, if you see quarter on quarter, if you see month on month, the numbers are not really that bad. So keeping that in mind, even Tata Motors after this correction can be one stock which can be accumulated for a long-term perspective.
Sandeep, in terms of specifics, especially after dissecting the trade today, where a lot of banking names saw unwinding, metals, of course, high beta ran up, saw unwinding today. What are the specific stock picks you have on your radar?
I have a sell in ICICI Bank, Ajay. The ICICI Bank has given a breakdown in the last half an hour, 1 hour. So I would sell that with a stop loss of 1042, target of 1005. I heard you talk of NMDC, that has given a breakdown. A stop loss sell with a stop loss of 134, target of 125. and a buy in Adani Power, which we talked of earlier. In case the market bounces back, I think this stock should outperform. So stop loss of 45.80, target of 52.
Okay, shorting ICICI Bank, NMDC, a buy call on Adani Power. Nitin, to bring it to you now, the market seem to love to hate PSU stocks, but do you think that SBI would be the odd one out, given that it's got the size, it's got the return ratios, which are fairly impressive, and valuations also now are suddenly supportive?
Sure. I think, if you look among the larger bank, I mean the largest bank actually, but if you look at among the PSU bank stocks, quite clearly State Bank, at this value this price shows a lot of value as such. It's again been really going nowhere. It's been trading in a range as such. It moves up, corrects, and then comes back. But clearly, I mean, the valuations are in its favor, and if you were to play the PSU banks, it would really be most definitely through State Bank.